So I'm going to show you something that few people really understand, and many advisors, well, they don't even talk about it. It's called sequence of returns, and for some, it can be a make it or break it analytic. Today, many advisors will quote average or annualized historic returns to give you an idea of how a particular investment may perform. For example, the S&P 500 from 1937 to 2016 averaged 10.3%. But as you probably know, that doesn't mean it returns 10% each year. The problem is this: average returns don't tell the whole story. It's the sequence of the returns that matter, especially when you're drawing income from your investments, like when you retire. So I built a little calculator to show you exactly what I mean. Now this is only going to take a few minutes, and I think it's going to be worth your time. Let's get to it. All right, so here's the calculator. I know at first glance it looks a bit much, but this is actually very simple. So these numbers on the left, here we have actual returns of the S&P 500 over a 20-year period. Why use the S&P 500? Well, simply because it's the most widely used benchmark. Now this 9.64% we see here at the bottom, that's the average rate of return over those 20 years. Now at the top, this is where we'll enter our data. I'm using a fictional scenario, but I think the numbers are pretty reasonable. So first we have the account value. I simply went with $1 million. Next we've got our inflation rate. I'm using 2.5% for inflation. And now here's something that's quite debatable: fees. So what fees are you really paying? I'm going to put in 2% here. A lot of people are invested in mutual funds and have an advisor. So this is all fees: internal costs, management fees, advisor fees, so forth and so on. But please understand, I'm not saying you should be paying 2% in fees. I'm only saying I see that scenario quite often. All right, now taxes. I'm going to use 18%. I think that might be reasonable. Now here is our initial withdrawal. Let's say this person needs to supplement $40,000 of income, or 4% of their account value. When somebody tells me they need to withdraw a certain dollar amount, more often than not, they need the net amount, meaning in this case, we'll assume this person needs $40,000 cash in fist. So we have to convert that into real dollars by adding back in taxes, inflation, fees, etc. So I hope that makes some sense. Here's where things get pretty interesting. So we see our returns in this scenario. Here we took out all of our withdrawals, paid taxes, paid fees, dealt with inflation, and we still have over 1.2 million left over. So we could have taken more money to live on, or leave this money to our kids, a charity, whatever. But hold on. Let's simply change the order in which these returns take place. I'm going to hit this randomize button right here and completely randomize the sequence of returns. In other words, none of the numbers change, just the order. So let's see what happens. This time we run out of money in 11 years. We're totally broke. Again, the average return stayed the same, 9.64%. It's just the sequence of returns, and that should scare you a little bit. So there's the problem with basing your investments off of average returns. When you're withdrawing money, it's the sequence of returns that's going to make or break you. And unless you have a crystal ball, it's going to be very difficult to predict exactly how this is going to play out. So what should you do? First, of course, talk to your trusted advisor. Ask that person how you can protect your income from this kind of scenario. Maybe shift risk from stocks to bonds. Maybe incorporate a fixed annuity or other kinds of insurance. Maybe look at adding stocks that historically pay dividends. Listen, you have many options, and there is no one-size-fits-all approach. Be aware, do your research, ask questions, and if you're overwhelmed trying to do it yourself, look for an advisor that you can trust. If you have any questions or concerns, please don't hesitate to contact our team at 800-722-0098 or visit us at monteverdigroup.com. Just mention my name, Adri Bleier, and I'll make sure your questions are answered just as soon as possible. Thank you for your time.